Hello guys, welcome back once again to the Financial Academy YouTube channel. Yes, of course, welcome back once again to my YouTube channel. So in today's video episode, I'm gonna be teaching you how to trade forex with $100 and grow it. Yes, of course, how to start forex trading with $100 and grow it. Yes, of course. So in today's video, I'm gonna be teaching you basically how to start forex trading with as little as $100 and grow it consistently with proper risk management. So if this thing is what you like, please make sure to give this video a thumbs up, like this video, subscribe to my YouTube channel, and also comment down below if you have any single question concerning any of my YouTube videos. Are you getting me? Without any further ado, and without wasting much of our time, I will take you over to my screen. Are you getting me? When I take you to my screen, I'll be able to break down everything and step-by-step process you need to follow and adhere if you want to grow your small forex trading account as low as $100. Are you getting me? This video is for you. Stick with me. Let's go to my screen right now. When I go to my screen, I'll be able to break down everything for you. Let's go to my screen right now. You love my videos. Make sure to stick with me. Are you getting me? Let's go. Let's go. Let's go. Let's go.
Hello guys, welcome back to my screen. You are welcome to my screen. So let's continue from where we stop. How to trade forex with $100 and grow it. A realistic guide for beginners. So how to trade forex with $100 and grow it. A realistic guide for beginners. So in this introduction, is it really possible? This is the question I'm asking you today. Is it really possible? Let's find out in this video. Trading forex with just $100 might sound like a marketing gimmick, but with the right mindset, strategy, and expectation, it is absolutely possible. The key word here is realism. You won't become a millionaire overnight, and you shouldn't quit your day job. What you can do is use this $100 as a learning platform to understand the market, practice disciplined trading, and potentially grow your capital over time. This guide will walk you through every step from choosing a broker to executing your first trade and managing growth. Are you getting me? Part 1 is this: the foundational mindset. Accept the reality. $100 is a tuition fee, not an investment. Consider your paid education in the school of trading. The primary goal is to learn and survive and not to get rich. Risk is amplified. With a small account, percentage loss hits harder. A single 10% loss wipe out $10. Discipline is non-negotiable. Are you getting my point? The next one is growth is exponential, not linear. Don't aim for 100% return monthly. Aim for consistent small gain. Growing $100 to $200 is a 100% return, which is the huge success. Are you getting my point? Then, the other one is the power of compounding. Yes, the power of compounding. This is your greatest ally. Small consistent percentage add up. Example, a steady 5% gain per month turn $100 into about $179 in 12 months. A 12% gain grow is about $303. This is realistic with strict discipline. Then we have part 2, the practical setup. Choosing the right broker. Not all brokers are suitable for $100 account. You need a micro or nano lot. The ability to trade sizes as small as 0.01, which is a 1000 currency unit. This allows you to control risk precisely. I'm getting my point. So also low minimum deposit. Obviously accept $100. Regulation. Choose a broker regulated by authorities like FCA in the UK and ASIC in Australia or CyprusSec to avoid unregulated ones. And also find a broker that has no hidden fees. Be wary of high withdrawal fees or inactivity charges. Other popular retail options. Some well-known brokers offering micro accounts include XM, Xnest, IC Market, and FS Pro. Always check their current terms and conditions. Are you getting my point? Then the next thing you need to know is understanding leverage, which is a double-edged sword, because leverage amplify your gain and also multiply your losses if you're not very careful. What it is a borrow capital to increase your position size. A 1:100 leverage means that you can control $10,000 with $100. The danger is this: while it magnifies profit, it also magnifies losses even faster. A 1% move against you can wipe out your entire account if not managed very well. So our rule is this: with a $100 account, use leverage consciously. It is a tool for margin requirement, not for taking massive bets. Never max it out. Are you getting me? The other one is the trading platform. Most brokers offer MT4 or MT5. Download it from your Google Play Store or Apple Store or from your laptop. Learn the interface and practice it. Then part 3 is this, the strategy, which is risk management first. Yes, risk management is your first strategy. This is the most crucial section. Your strategy is 90% risk management and 10% trade entry, which is which is the golden rule, which is the rule of 1% rule. Risk only 1% of that account. If possible, 0.0, if possible, 0.5%. Never risk more than 1% of your account on a single trade. For a $100 account, 1% is equals to $1. This is your maximum loss per trade. Why? It ensures that you can survive a losing trade. Even 10 losses in a low only costs you $10. Never, and leaving you $90 to fight another day. Are you getting me? Then we have position sizing, the math that saves you. So how to determine how do you ensure you only lose 1% per trade? Is by this: determine your stop loss. Decide how many pips your stop loss will be, and say whether it is 20 pips or 30 pips based on your risk. Are you getting me? Then number 2 is calculate your position size. Focus on micro lot, which is 0.1, or 1 pip movement, which is 0.10 for USD pairs. To lose $1 or 100 cents with a 20 pips stop loss, or to lose 100 cents or 20 pips in a 5 cent pip stop loss, therefore your trade size should be 0.005. Most platforms allow this. Are you getting me? So the formula is this: your position size equals risk in dollar over stop loss in pips by pip value. Then the next one is stop loss and take profit are your best friend. So stop loss, which is SL, is a must that you must always use one. It automates your 1% rule, it automates your 1% risk rule and remove emotion. Take profit, which is TP, aims for a risk to reward ratio for at least 1:1.5 or 1:2. If you risk $1 or 20 pips, target a profit of 1:50, which is 30 pips, or $2, which is 40 pips. Are you getting me? Part 4, a simple actionable trading plan. One is this: keep it simple. Price action on a higher time frame. Yes, keep this thing simple. Price action on a higher time frame. Avoid the noise on a tiny account. Don't day trade with 1 minute chart, please. Don't day trade with 1 minute chart. The spread are too high and the wide and the spread are wide. It only eats you alive. Are you getting me? I recommend this trading time frame is either you're trading on the 1 hour or 4 hour chart. Look for 1 or 2 quality setup per week. A simple strategy: identify support and resistance plus candlestick of confirmation, which helps you to identify a clear level of support where price bounce up and resistance where price falls from on the chart. Number 2 is Wait for the price to approach one of these levels. And number 3 is look for a rejection candlestick pattern like pin bar or engulfing bar forming at the level. Are you getting me? Then enter in the direction of the rejection with your stop loss just beyond the level. Are you getting my point? Then the fifth one is set your take profit at the next support or resistance level to achieve your risk to reward. Are you getting my point? Then number 2 is this: choose your pair wisely. Start with major pairs like Euro USD, GBP USD, USD JPY. They have the lowest spread cost and the highest liquidity. So you need to avoid the exotic pairs. So the part 5 of this is the step-by-step guide for execution is this. Number 1, fund and practice. So you need to fund and practice. Deposit $100 into your choosing regulated account. Open a demo account first and practice your plan for at least a month. Do not touch your live money until you are profitable on demo. Then analyze each Sunday evening. Analyze the weekly chart for a major level. Then trade down to 4 hour or 1 hour for your entry. Then number 3 is wait for your setup. Yes, wait for your setup. Be patient. No trade is better than a bad trade. Wait for the price to hit your predefined level and show confirmation. Then number 4 is calculate and enter. Use the position sizing formula. Place your trade with stop loss and take profits already set. Then number 5 is walk away. Once the trade is open, let it run. Do not move your stop loss or close early out of fear or greed. Number 6 is journal. Record every trade per entry, exit, stop loss, take profit or loss, and most importantly, your emotional state and lesson learned. Then let's move to the part 6, the path to growth and scaling your account. Phase 1 is survival, $100 to 110. Your goal is not to blow the account. Execute 10 trades flawlessly following your rules, regardless of outcome. Congratulations, you have passed this first test. Phase 2 is consistency, 110 to 130. Focus on a positive win rate, example 55%, while maintaining your 1% risk, and 1 is to 1.5%, or 1 is to 1.5% risk to reward. Phase 3 is gradually scaling, 130. Once you have 2 to 3 months consistent month of small profit, you can consider scaling by equity and not by greed. Then the next method is recalculate your 1% risk based on your new account balance. When your position size account grows to 130%, your new max risk per trade should be $1.30. This slowly increase your position size as your skill and capitals grow. Then the withdrawal milestone is this: when you grow your account by 50% to $150, consider withdrawing your initial capital, which is $100. Now you really play with house money, which is a huge psychological boost. Are you getting me? So now when you have made the profit, let me say that you have traded the $100 account and flip it from $100 to $150. Withdraw your initial capital. After you withdraw it, now you are now playing with the house money, which is a huge psychological boost. In conclusion, this is the honest truth. Trading forex with $100 is a severe test of discipline. It will teach you lessons that a $10,000 account wouldn't. The market doesn't care if you have $100 or $100,000. The principles are the same. Your success depends entirely on number 1, respecting your risk management rules. Number 2, embracing patience. Number 3, controlling your emotion. Number 4, committing to continuous learning. Because you need to start small, think big, Most importantly, think long term. That $100 seed, watered with discipline and knowledge, can grow into a robust trading tree. But it all starts with not letting it get washed away at the first storm. Are you ready to begin? Open that demo account today. Your trading journey starts with a single well-planned trade. Good luck and trade smart. Like I always say this is a disclaimer. Forex trading carries a high level of risk and may not be suitable for all investors. The possibility exists that you could sustain a loss of some or all deposit funds. So this content and video is for educational purpose only and should not be considered financial advice. Past performance is not an indicative of future results. I get my point. So let's continue. Five important lessons. Traders learn late. You need to know this. Once you are seeing this diagram, you need to understand these 5 important lessons that traders learn late. Calculating risk percentage is necessary. Calculating risk percentage is necessary in trading. Number 2 is patterns don't mean anything on their own. Yes, patterns don't mean anything on their own. Number 3 is confluence will increase your win rate. Yes, confluence will increase your win rate. Number 4, incorporating losses into your plan is a must. Yes. Number 5, win rate is a useless statistic if your risk reward sucks. I get my point. Be very, very careful. Be very, very careful. Then the next thing you need to know is what disciplined traders do all the time. Yes. You need to know what disciplined traders do all the time. Number 1 is this. They wait for the trade to come. Yes, of course. Disciplined traders wait for the trade to come. Are you getting my point? Yes. Disciplined traders wait for the trade to come. Number 2 is this. They don't trade every day. Yes, of course. Disciplined traders don't trade every day. You need to be very careful. Disciplined traders don't trade every day. Number 3 is they make their watch list daily. Yes, of course. Number 4 is they journal every trade. Yes. Disciplined traders journal every trade. I get my point. Number 5 is disciplined traders, they always review losing trade. Yes. Disciplined traders, they always review losing trades. Number 6, this disciplined traders never overtrade. Number 7, disciplined traders brush off their losses. Number 8, they have a hobby. Number 9, disciplined traders, they never marry their trades. And number 10, disciplined traders, they never compare or compete. I get my point right now. So these are the things that disciplined traders do all the time. So you need to follow your rules and wait for the trade to come. So if you can be able to be disciplined, patient, and master risk management, and have a good strategy, and have a well-built trading plan, I'm telling you honestly, you will grow a small account consistently. But that doesn't mean it's a get-rich-quick scheme. No, Forex is never a get-rich-quick scheme, and it will never be a get-rich-quick scheme. Take your time and learn, because Forex is a marathon and not a sprint. So if you have watched this video up to this moment, please comment down below. Forex is a marathon and not a sprint. I know that you have watched this video to the end. Also, do not forget to like this video. Do not forget to subscribe to my YouTube channel, and also comment down below if you have any single question concerning any of my YouTube videos. And I will see you on my next video episode. Please take care, stay safe, and love you all. Bye for now.